What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Skillz Incorporated, ticker symbol SKLZ. The company reported their Q2 earnings yesterday, and we saw today the stock reacted very negatively, down about 10%. Now it's pulling back a little bit in the after hours trade, but this stock earlier this year, back in February, this was a $45 stock. Now we're all the way down here at $12. So today's video is not only going to be covering Skillz financials, we'll take a look at the revenue, the profit, those types of things. We'll even compare it to some comparable companies, I believe, but this will also be an exercise in highly speculative stocks and how you can make lots of money going up, but you can lose it very quickly going down. So my first advice is, if you're buying stocks like Skillz, you need to earn the art of the stop loss. Do you really need to set a stop loss on your buy and hold blue chip stocks, your FANG stocks, your dividend paying stocks? Maybe not. I'll let you decide what you want to do there. But on Skillz, a stock like this, absolutely, if this thing starts running up, you need to hit trailing stops, because when the momentum reverses on these speculative stocks, it comes down, and it comes down quickly. Now, revenue grew 52% in the Q2, and you might say, well, 52% revenue growth, that's really nice. I just did a video on McDonald's. Yeah, that's right. McDonald's grew, I think it was like off the top of my head, 56% in the most recent quarter. So you see blue chip companies growing in this 50% range. Skillz, in my opinion, has got to come over that. Now, they are growing. They completed an acquisition earlier this year. That is expected to contribute about $13 million to their top line revenue. They gave guidance of $389 million worth of revenue for the full year. Consensus was at $379. So the company is growing a little bit, but they're growing their revenue through acquisition and those types of things. We'll talk about the other ways that they're growing their revenue as well. Now, the one thing about Skillz is, in my opinion, it's a cross between Zynga, which is a long-time stock. Many of you that are younger investors might not remember the craze and the excitement around Zynga. Kind of reminds me of the early hype that you saw with Skillz stock. Well, this one deflated basically as fast as Zynga, but it's also a little bit of DraftKings. There's a little bit of peer-to-peer stuff going on over at Skillz. I don't know if they're going to have regulatory troubles in the future, but I can imagine they might, because we've seen that with DraftKings and maybe even Zynga to a certain degree, but certainly DraftKings has had to really go state by state to get regulated. And so you never know, Skillz might have to cross that bridge at some point. But this is a price to sales chart. Skillz is in orange, Zynga is in blue, and DraftKings is in purple. In my opinion, I don't think Skillz should trade at a premium to DraftKings, and currently it doesn't. It trades about 14 times sales. But we see Zynga, which has been around the longest, at least from a publicly traded standpoint, trades at just 4.62 times sales. DraftKings trades at 20 times sales. And I think DraftKings deserves a little bit of a premium because, like I said, they have gone state by state to try to get regulated in those markets. And once you get regulated and kind of grandfathered in, yes, you do have to pay a little bit more in tax, but it does take a little bit of risk off the business, which I think is still present in Skillz stock. Now, speaking of Skillz stock, we're going to talk about some of their financial information as well. But one thing I want to remind you of is one of the biggest holders of this stock is actually the ARK Innovation Fund, ticker symbol ARKK. Kathy Wood's fund holds 13.6 million shares, in fact, over that, and we'll see if she's bought the dip over the last couple days, but that's over $186 million worth of Skillz stock. Look, this company is worth $5.87 billion. The fact that they own 186 million of it is actually pretty interesting. Now, one thing to keep in mind, inside this fund, Skillz has less than a 1% weighting, so it's rather small. And we'll talk about maybe if you want exposure to Skillz without a lot of this downside risk, maybe buying a fund like this might insulate you to a certain degree. Now, let's talk about the supplemental financial information. I will get into the revenue and profit. These are some of the most important things that you can watch on today's video, but what I wanted to show you is we got monthly active users. This is anybody using the platform, not necessarily somebody playing a paid contest. We actually saw that tick down in the most recent quarter, but we did see paying monthly active users. These are people that are, think of people that are pretty active, people serious. They're actually whipping out a credit card or PayPal or something to deposit money on the site to play somebody else in a game for money, basically almost like an online poker situation or even like a DraftKings situation. That's why I think this company might have regulatory hurdles in the future. I think they're flying flying under the radar a little bit, but a company like this gets big enough, I think they're going to run into some problems there. But either way, we see it. We actually see that number tick up. And so while we had monthly active users tick down, more people are paying. And so that is probably a good thing. Although my guess is you have people jump on the site for free and then you convert them into paying members. So if we've seen a decline in the monthly active users, makes me wonder maybe subsequent quarters there. Now let's take a look at the revenue. Again, that grew 56% like the press conference said. So we've got our 3 months ended 2020's right-hand column. Left-hand column is the most recent quarter. So we grew from 58 million up to about, we'll call that $90 million. Now it's an extraordinarily high margin business. People like this originally about Zynga. They could put up a game on Facebook or their own app, and it didn't really cost a whole lot. You had some upfront costs, but once users were using the game, it was really, really profitable. And we've seen this with like Take-Two Interactive and some other companies out there that done a nice job at this. We only had to spend 4.3 million to make this 90. Now, unfortunately, we got research and development as well. That went from 4.5 up to 10. So we more than doubled our research and development. Okay, our revenues grew 50%, but we doubled research and development. Sales and marketing, take a look at this. For a declining monthly active user total, 2.6 down to 2.4. Well, take a look at this. Our marketing spend went through the roof. We went from 52 all the way up to 99, almost $100 million. In fact, our marketing exceeded revenue. Now, some of you might argue, well, you got a paying user on this site. They use the game for 4 or 5, 6, 7 months. That upfront marketing cost is not that big of a deal, but we're really not seeing this business scale out very much. Okay, look for the 6 months ended last year. We spent 99 million to make 102. That's just on marketing. That's not any other expenses. Take a look for the last 6 months. We had to spend 195 to make 173. We're actually going in the wrong direction in terms of our marketing spend and having it turn into immediate revenue. Now, the management of this company will convince you, oh, well, the revenue will come. Don't worry, we've acquired this user. No, this is showing me that their marketing dollars are going less far, that it's getting harder to market, harder to get new customers, more expensive. This is not good. Take a look at general administrative. That also more than doubled. Again, we 50% growth on the top line. Great. That's what they're going to put in the press release. That's what they're going to tell you on these financial sites. Well, then our cost of revenue basically doubled, which you'd probably expect. Our research and development more than doubled. Our sales and marketing almost doubled. And our general administrative more than doubled. Our total costs and expenses went from 71 million, almost a perfect double, up to 140 million. I'll remind you, we had only $89.5 million worth of revenue, minus our total cost of expenses at about 140 million, and we get a loss from operations at right around $50 million. Last year, we were only, and I say only because it's not nearly as bad as 50 million, we went from $12.6 million loss last year all the way up to 50 million. This business is not scaling. Take a look from the 6 month perspective. We went from a $27.8 million loss. You guessed it, we nearly quadrupled it to a $101 million loss. This business is an absolute complete disaster. Now, unfortunately, they had to have a change in fair value of the common stock warrants. As your stock does this, then you've got to adjust the value of those warrants. And boy, I bet those investors are not happy because they probably bought in at a much higher valuation. I'm sure Kathy Wood bought in at a much higher price and valuation as well. That gets us to a loss from operation at nearly $80 million, although I don't necessarily think that's super fair. So I'll stop here at loss from operations, which is still a complete disaster because when you look at a loss from operations, you quadrupled from $20 million loss up to nearly $80 million loss. This is exactly what you don't want to see. And this is why the stock has gone on this steep downtrend. So if you buy a stock like this and it goes up and then it goes down and you wonder what happened, well, you need to be pulling up these financial documents because look, we talked about this stock several months ago here on the channel. We talked about how it's not headed in the right direction. It has been telegraphing this really over the last year. You need to get out of these types of stocks once the numbers start proving that they are an absolute disaster. From a balance sheet perspective, not all that bad because they've raised a ton of money issuing stock, right? Okay, take a look. Weighted average number of shares outstanding over at Skillz. Last year, there was 289 million shares. Now there's 385 million shares. Nearly 100 million shares were added. So yes, you grew your top line by 56%, but it looks like you grew the average weighted number of shares outstanding by about 50% as well. Now that has helped bolster the balance sheet. They got $700 million in cash or so, $720 million worth of total asset or total current assets, or really total assets. Total liabilities only coming in at 185. Okay, they've funded this stock how? By getting fools like Cathie Wood to buy it, getting other people to buy this stock, and they've been able to sell the stock because their business doesn't make money. Okay, the way they have to raise money is coming down here. Proceeds from issuance of common stock offering, $400 million just in the last 6 months. So they've raised $400 million just by offering the stock, and then proceeds from excess of the warrants, they've got another $109 million off of that. So over $500 million of this $700 million sitting on the balance sheet just in the last 6 months has come from issuing the stock. Now, the rest of the money has been bled out of the company. You pull this net loss down, you've got stock-based compensation. Take a look at this. You got $26 million worth of stock-based compensation. This should just make you absolutely sick as a shareholder because the stock went from 46 down to 12 million in really the last 6 months. And guess what management has done? Given themselves $26.7 million worth of stock options just over the last 6 months, let alone everything else. It's just an absolute disaster and a disgrace. And the management and shareholders of this company should be absolutely disgusted, especially the shareholders at management, for rewarding themselves with $26.7 million when the stock has just completely fallen off a cliff. Those guys should forego their salary, turn in their stock options, and turn this ship around. My guess is they're looking for a new yacht, a new Mercedes, a new Rolex. They don't care because investors have not been putting enough heat on these guys because this is an absolute disaster. We'll see if Cathie Wood ends up buying the dip or what she ends up doing, why she owns some of this company. I don't know. In my opinion, if for some reason, after going through these financials, you want some exposure to Skillz because you think this company is the future of gaming, even though people said that about Zynga as well, and that didn't necessarily work out that great, well, then maybe I would just buy shares of ARKK. But then you're getting exposure to Tesla, Teladoc, Roku, Square, Zoom, Shopify, a lot of other stocks that you may or may not want exposure to. Now, everything that I just said was from a fundamental perspective. From a technical perspective, it doesn't get much better than this. See, that's why you love this channel. We absolutely barbecue this company because these financials are a disaster. I would not buy this company on a fundamental basis. There's nothing here that would make me want to buy this stock. From a financial perspective, from a regulatory perspective, people are not taught, and you look at the analysts, people that are covering this stock, they're not really talking about the regulatory risk that this company runs. That all of a sudden they turn into the next DraftKings and they've got to, go state by state spending millions of dollars greasing up politicians and lawyers to make their games fair and legal. But from a technical perspective, it looks like this thing is going to bounce like a basketball right off the level that we're sitting at right now, right about $12 per share. Why do I think that? $12 was resistance back here. It was support all along here. Support. Eventually, this stock rallied hard, like we talked about, all the way up to 46. Where did it come down to? All the way down to right around $12, where the stock is right now. Rallied up all the way pretty hard, actually doubled to 24, and then came all the way down here to 12. Now, is that a guarantee that this $12 level will hold? Absolutely not. But you notice where the volume spikes on this one, okay? The stock's right at around 12. Volume spikes. Volume spiked right around here. Must have been some kind of news. Volume spikes down here at 12. Back in here where the stock's at around $12. Volume spiking again. There's a lot of people that support the stock. Maybe you got someone like Cathie Wood. Maybe you got other fund managers, something like that are supporting this stock around 12. Again, you've got a lot of warrants invested. They had to write down those warrants by $29 million, almost $30 million. There's those people that don't want to see that investment. There's management of Skillz. They do not, I guarantee you, they do not want this stock to go below $10 per share. Because once you go below $10, then it could be that Cathie Wood's got to sell, other funds got to sell. It's just a free fall into penny stock status once you get below $10. So management is going to put out press releases and going to make things seem glorious over the next couple months. They do not want this stock to break this $12 level. You break this $12 level, yes, there's a little bit of support down here at 10, but I wouldn't bank on it. So if you want to trade this one, I think there's a technical bounce going to happen here. Okay, I'd put in a trade somewhere in here, 11 to 12 bucks. I'd put a stop loss under the lows of the stock, or right where the lows of the stock, right around $10. It looked like this one IPO'd right at 10, right under 10. I'd put a stop loss there because you break that, it's free fall down to penny stock. So you risk $1 or $2 on this one. And look, the last time we bounced at 12, we went all the way back into the 20s. So you got $10 in upside, $2 in downside. I don't mind if you want to trade this, and that's your rationale. It's, hey, from a technical perspective, I'm going to trade this. I'm going to have to set up a trade. You need an entry price, a stop loss price, and an exit price. Plan where you're going to exit this one. Because if it starts going up, it starts doubling, everybody's going to tell you Skillz is the next, Apple or whatever, okay? And so you got to learn how to get out of these things as well. But from a fundamental perspective, don't think about making an argument down in the comments for this. This is an absolute disaster of company. These financials are a disaster. They're not going to be able to turn these around anytime soon. When you're looking at the marketing spend and you're looking at a decline in monthly active users, they're getting less users per dollar, and I don't think that's going to turn around. You can just ask old Zynga Incorporated if that ever turns around, and the answer is a big fat no. Hopefully you guys enjoyed this video. We'll be back again soon with more here on the channel. Good luck with your investments.